The media is making a lot of noise and saying that President Xi in China's third term is very troublesome for investors, but I actually don't believe that. And so I'm going to dissect that claim by the media. And so while you guys smash that like button, let me run the intro. What's up, guys, and welcome back to the channel, and let's dive right into this one. So you can see here that Alibaba's shares are now down approximately 46% year to date, and part of that decline did come after President Xi did secure his third term. And so one of the reasons why that's happening is because there's been a huge outflow of capital as a result of President Xi taking on a third term, and this is what I mean. These are the headlines coming out of the media, and so this is Barron's. Now, I like Barron's. I have a subscription to them, but this is nuts. So they're saying President Xi's third term spells trouble for investors. But what they don't tell you in that article, and I'll show it to you guys, is anything that's new or different. And so this is what they're saying. Strategists and money managers are bracing for bigger steps towards the untangling of U.S. and China ties in critical sectors. And so they're sort of getting ready for less harmonious relationships. And I do believe that the media is just creating news, in my opinion, because both administrations, China and the U.S., have come out and said they want a more harmonious relationship. They want to get along. And so this is crazy. But the crux of it all is that after President Xi cemented his power with his third term, he effectively has brought more loyalists together, and so it should allow him to continue the ideological policy and a more aggressive global stance. Fine, but in order to grow their GDP to the level that they wanted to grow at, they're going to have to learn to get along with the world. So why would they go counter to their own interests to do that? I've explained that many times on this channel. And so strategists are saying that some sort of breakup in areas like advanced technology looks inevitable. And so if there's a breakup in advanced technology, which I do agree looks inevitable, does that mean that they're still not going to be deeply entrenched and working together? I don't think so. And so I think they're using one area and then overstating it to the impact of the relationship overall. But you guys might disagree with me on that point. Let me know in the comments what I'm missing. And the Biden administration underscored the change underway as both companies view their relationship and engagements through a national security lens. Now, here's the thing. Technology and data security has always been a focus of national security. So same president, same issues, nothing new here, in my opinion. Now, here's more media FUD, I would say. Now, they're saying even if policymakers foresee long-run benefits in disentangling the two economies, their choices come with immediate costs. Okay, fine. And so a prolonged unwinding of the old way of globalization that underpins the economic growth in markets for decades will require an investor reset. Once again, I think this is a media noise. They don't know how this is going to play out. And so, yes, it could create more risk, but there's always been risk as it relates to investing in overseas companies. And so this is not new. I just think that this is a little bit more media noise. Like, is there a greater risk of investing in China from today than it was 3 weeks ago? I don't think so. It's all the same stuff. And so I think they're creating a hubbub over not much. And now they also found a strategist who said that you need to start considering inflation hedges, preparing for higher default risk levels, and rethinking diversification, who are now favoring more real assets, preference to U.S. investments over international, and a greater allocation to gold. Now, look, from my perspective, there's never been a time when investors shouldn't have been considering all potential risks. But I don't think the solution is buying more gold and real estate. So call me crazy, but I have assessed my risk. I've assessed my portfolio valuation or portfolio diversification well before this news came out anyways. And so we got to look at what the valuations for these companies are. If Alibaba's share price reflects 2/3 of just the cash on the balance sheet, you have a gross undervaluation. And that's the story that I'm going to stick to. You guys might argue with me, and I know there have been some people that have argued with me that $65 per share for Alibaba is still a high valuation because ultimately the company's valued at zero, but I disagree. And so I'll stick to my stance. I'm going to continue to be investing in this name, and you guys can talk all the crap that you want, but it's not going to dissuade me, because at the end of the day, we just have a difference in opinion. And so I'm not buying into the media FUD here. I know there's a lot of people that are not buying into the media FUD. And so if you are, or if you do believe that this investment is not right for you, that's good. That's your opinion, but it doesn't mean that the stock is worth zero. And here's the exodus that has happened in October. You can see that there's just been a mass exodus from the Chinese domestic stock market. So a lot of people are reading into this media narrative, in my opinion, and just leaving the country as a whole. And so I don't blame them, because, you know, they might just want to invest more in U.S. names as U.S. names have become cheaper. And there's a lot of uncertainty around the zero COVID risk, how President Xi is going to react now that he has more loyalists around him, and how the U.S. and Chinese relations are going to sort of manifest out, especially with those Taiwan comments. And you guys might be wondering, what were those Taiwan comments? Well, you can see here, they said that they resolutely oppose and contain Taiwan independence. And that's what they updated their charter with. And so they've gone on to say that we will never promise to renounce the use of force, and we will reserve the option of taking all measures necessary. And so the winds of war are blowing. However, the U.S. military has estimated that the Chinese military action against Taiwan will come as early as 2027. However, the U.S. needs to be prepared before 2024. Once again, this is both saber rattling. What else is new? Neither could afford a long, prolonged global war due to the invasion of Taiwan. And like I said previously, President Xi's recent comments about looking to be friendlier with the U.S. is an indication that they're not going to just start a flat-out war to take over Taiwan. In fact, China's position has always been a one China, two separate rules of law approach. So China is governed under one set of rules and Taiwan is governed under another set of rules. So they never wanted to change the status quo anyways. So why would the media suggest that they're just going to invade Taiwan? Because that suggests that they're just going to take them and turn them into China flat out, nothing sort of addressing the local differences between the Taiwanese people and the Chinese people. And so I just don't think that's happening. I think this is a sensitive issue for both the Chinese and the US, and none of them really wants to rock the cradle here, especially in an environment where they need to work together. And so once again, I think this is a lot of media FUD, but you guys might disagree with me, and I'm very interested to know what you guys think. Let me know in the comments below. And of course, this caused the stock market to decline considerably. A consolidation of power by Xi has alarmed investors that have already faced political uncertainty and regulatory headwinds from China's authoritarian regime. And so there's just a lot of fear and uncertainty in this market. But I'm not the only one now who's saying that China is cheap. And I've been proving it to you guys mathematically why certain names like Alibaba is cheap. I did show you that their cash per share is around $40. And so 40 of the $60 per share current share price is just cash. So that of course tells you that the company's absolutely cheap. But there's another guy who's come on board with me. Take a look at this recent tweet by Michael Burry. Meet the new boss, same as the old boss. The Hang Seng recently hit 1997 levels 25 years ago, yet the GDP has multiplied 18 times during that time, and the 1997 valuations were just 20 times earnings. So that really goes to show you how cheap the current valuations are. And note that 3 of the last 4 premiers have served 3 terms, and this tweet was put out just a few days ago on October 25th. So once again, nothing new here. And these are risks that we've already taken into account. We all knew that President Xi was going to take on a 3rd term. We knew this a year ago. And so I don't understand what's with all the FUD. I don't understand what's with all the sort of like withdrawals or just people saying, listen, I'm not going to invest in China as a whole. Take a look at Tiger Global. They're just not investing in China as a whole right now either. And so a lot of uncertainty, but a lot of uncertainty creates a lot of opportunity. And so now I'm in a position where I'm going to start thinking about allocating a slightly higher percentage of my portfolio to China. Right now I'm around 10%. Do I go to 20%? Do I go to 15%? I don't know, but I think before the end of the year or into 2023, I probably will have a higher allocation to China. That's where I stand. Let me know what you guys think in the comments below. And I recently put out a video on Alphabet. That's a great future-focused company that is now trading at approximately 50% of its intrinsic value. So very cheap, similar to the cheapness that we see with Alibaba. Obviously, Alibaba is trading much cheaper than that. But to get to that Alphabet video, click right here.